What was the first DePIN network, by the way? It was Bitcoin.
That's a take.
A lot of people would argue against that, but
I think we could.
This is what we're here for. Let's go.
The initial version of DePIN may have been incorrect, which is launch the token, then get to PMS, and then you have utility.
People try to stretch DePIN into like all sorts of categories. I think at the end of the day, what I've realized is like there's so many interesting things going on that you don't need to. Like there's so many cool things that are going to emerge and that'll create their own communities, and the DePIN community is kind of massive already. So like I really think about it in terms of physical infrastructure being incentivized. Doesn't necessarily have to be in a crypto native way. You know, in that sense, DePIN is an asset class.
If your business model relies on coordinating behavior changes among groups of people and also coordinating huge amounts of capital to catalyze some new activity or infrastructure in the world, then building it in on-chain capital markets on crypto rails is really the only way to do that today.
A lot of the same things that you do as an investor, you have to have as a builder. And this really one thing that you need to get really right is inspire smarter people to come join you in the mission. Thank you very much for joining the first episode ever of the DePIN Roundtable. Super excited to get some new faces in here. So it's Mahesh and I, as usual. Mahesh is a co-founder and investor at EV3. And then we've got Jason from Daylight, which is an energy DePIN, and Santi from Inversion Capital, which is I'll call it a crypto native PE firm that's looking to use DePIN behind the scenes to really drive a lot of operational efficiencies and change the game as it relates to crypto adoption. So guys, super excited to have you here. Thanks for joining. I want to do a quick kind of roundtable on like what's been up with the gang, what's everyone been up to. So Santi, let's start with you. I saw you were just on stage in Dubai at Token giving a bunch of big talks, mostly centered around crypto adoption and Inversion Capital specifically. So I'm curious, just like general takeaways from the conference. Were people bullish or bearish? And also what's the latest with Inversion in terms of where you guys are at in fundraising and hiring and building everything out? Yeah, definitely. Thanks for having me on, guys. Look, I think the theme, we're in this like very interesting time in the crypto as an industry where I actually think people outside the industry, non-crypto natives, are vastly more excited about what this technology is going to do to their businesses. I mean, every day, just today, right? Like you have Stripe announcing obviously the Bridge acquisition, but how they've integrated, Coinbase, like the X was a 402 standard. Like I just get a feeling that like BlackRocks of the world, Stripes, or Ramp are really appreciating how stablecoins and particularly stablecoins like are really going to transform their business in a very meaningful way. And so, whereas crypto natives are kind of like very skeptical because prices are not doing anything. But yeah, no, the sentiment in Token was very positive. I mean, what we're doing at Inversion, I would summarize it as like, just very specifically in every discussion that I have is like, why don't we have like 10x, 100x more users on chain? Because if you invert and you say, if the product is that compelling, if someone just heard that and say, they're going to immediately say, if stablecoins are really room temperature semiconductors, or if what you're doing on the DePIN side is so transformational, why is it that people haven't really used it as much? And it's something that has haunted me. And honestly, when I go to Thanksgiving dinners or just normal conversations with industry experts, and a lot of what we've done at Inversion is really pressure test. A lot of what we're going to talk about here is DePIN. So I've talked with a lot of telco experts that immediately say, I spoke with like one of the early employees at Skype who ended up running a couple MVNOs in Europe. And he said, listen, I've tried to do coordination at scale of hotspots. Reliability does not work. I'm like, well, what about the crypto piece? Crypto is really good for coordination. He's like, maybe it can work. And so it's just been interesting evolution as we've gone through this process of saying we truly believe that DePIN is a technology that facilitates, reduces like the transfer of CapEx to OpEx or just to more participants, that like really changes the game of infra CapEx heavy industries and makes it more economically viable. But of course, you're going to face a lot of resistance from industry experts that rightfully so, just are skeptical and don't kind of appreciate the crypto side of it. But it's still very important, at least for us, to get their perspective because like DePIN hasn't gotten everything right. I'll be the first one to say, like, as we've studied a lot of these networks and you guys are experts at EV3, I think we can all like be honest about like DePIN is super transformational. And I was on a panel with the Helium guys, 00, and GeoNet, and they're all each specifically like doing some really interesting things, but it's not perfect. And so I think the more we're honest as an industry about some of the things that haven't been working will allow us to iterate on the model, which I think is really powerful and like transformational. But there's still a lot of things we need to kind of improve upon. And obviously Jason's here with Daylight, and they're doing some really interesting stuff, so I'll stop talking.
100%. Yeah, I mean, that's a big part of why we're calling this the DePIN Roundtable and why we're doing it, right? Is like we have got a bunch of different perspectives from people that have been in DePIN for a while, and we're very excited still about DePIN and the promise and potential that it has. But at least to me, it feels like we've plateaued a bit. Like I want revenue to really start to skyrocket across the sector, and there's only like a couple bright spots in terms of DePINs that are earning revenue and accruing it to their tokens and kind of making this whole flywheel work. So excited to really dive in, especially later on tokenomics and new different things that, Jason specifically is looking to try and we've seen work maybe in other industries. But yeah, Mahesh, over to you now in terms of, what you've been up to. I'm personally very excited for the DePIN Summit in less than 2 months now, which is going to be in Africa. We got an emerging markets variant of the DePIN Summit there. But I know you're also fundraising for Venture Fund 2. So how's that going? I'm seeing a lot of new venture partner announcements on the timeline, which I very recently found out basically means someone's like leaving a venture firm.
Yeah, that's not a good sign. It's like all these people like bragging about being venture partners, and that usually means like you probably didn't do your job well enough to stick around, or like that by the same token, like someone doesn't want to have a tough conversation with you. So they kind of keep you around, or it goes the other way in some cases where like there's a founder that's just like insanely good at what they do and you want to get them involved in some kind of way. So yeah, it's this funny like token thing that I think people use to kind of keep you around and keep you vaguely involved. I think what I find is when I see that happen among like super junior VCs, it's normally that like someone didn't want to keep you around but didn't know how to have that conversation. So I was seeing a lot of those kind of come up this week. Fundraising's been an interesting experience. I think crypto as a whole feels like it's in a little bit of a doldrums among managers for sure. It's super interesting. I think for the last 2 to 3 years, people probably would have been super competitive about this. And all of these fundraising conferences were genuinely just like people sharking each other to try to get in front of the right person, to try to get the capital. And one of the amazing things now is like there's actually just like a bit of a broad resignation against across managers, whereby like people are kind of acknowledging it's like, yeah, we might not get to our target. Yeah, we wanted to raise 100. We might only raise 40 to 45 instead. That's okay. And that's fine. And so, for the first time in a while, I think I was at this conference for the first half of the week with like most of the larger crypto funds, and it was super collegial and people were like really friendly in a way that they honestly haven't been in the last couple of years, because I think everyone has been so stressed out about fundraising. So it's funny because I think on the fund manager side, it feels like we're almost back to WAGMI a little bit because everyone is trying so hard to survive. So just for context, like we're raising a new fund right now. We first closed on about half of it. It's been about a couple of months. I think there's probably 35 other funds that I met that are in exactly the same position. Everybody has a good first close. Everybody has 1 or 2 good investors that's willing to back them. Nobody has like a really strong path to like really getting to where they wanted to in a way that, makes them feel happy. So we're still fingers crossed.
Except maybe Santi.
Yeah, except maybe
Just
Santi's like the one sort of like... Santi, how the hell did you raise like you guys were like 5 times oversubscribed, you said on the fundraiser? Can you tell us a bit about that?
Well, incredibly lucky to have like really good partners around the table. I guess the industry has come, when you speak silent truths, people really respond well to that. And the question again that I've asked myself for so many years, I've been in this space, like, why don't we have 100 million, 200, 500? Like, what is stopping us from getting to 1 billion users? And I've invested in so many startups, including Daylight and other DePIN projects. Like, I fundamentally believe that we have killer products, stable coins. I grew up in Mexico, goddammit. Everyone wants dollars. Why is it that, you just start at a very fundamental level asking these questions? And so, yeah, like, I think the approach that we're taking is a fresh one. Like, a lot of the things that we hear from the people that we talk to is, I'm glad someone is taking a big swing because the industry needs it. And I'm not here to tell you that we don't need more L1s or L2s, or that of course we need to experiment. Like, that's the arc of technology. Like, absolutely, we haven't even begun to scratch the surface. But I do think we're at a time where the timing is right and the infrastructure is very much ready. Meme coins were a really good proof point. Like, you had a president that launched a meme coin on Friday, and you had 20% of NASDAQ's volume over the weekend, and things didn't break. We're very much ready to go to 1 billion users. And so I think, like, I don't know, I just got tired of trying to say this over and over. And I was like, one day I said, fuck it, I'm just going to do it. And, Jason has been a big inspiration. He is someone that, I got to know him because I invested in Daylight. He's done private equity before. And we both kind of were like, instead of trying to convince businesses to use crypto, I think we should just go and acquire them. Because the competency of, like, how many people think crypto has really good technologists, but not so much like the BD muscle, which I think, like, what has changed in crypto over the last 6 to 9 months? You had the leading fintech company in the world acquire, which is Stripe, acquire Bridge, because the Collison brothers are smart enough to appreciate that you can't innovate your way out of a financial system that was built pre-internet. So you have to go buy something that allows you to, like, leapfrog that. But when you're trying to, like, onboard people to really transformational technology, I think it's really hard value proposition. Like, stablecoins have always been amazing products. The question is, but when you see a stablecoin, when you see USDC in the exchange or your MetaMask or Phantom wallet, it doesn't feel like money. It does feel like money when you see it, when you go check out with Shopify or PayPal or any other companies and merchants that use Stripe. And that is, like, a very big change that this industry's gone through over the last 6 months. It's probably the biggest change this industry's had. So, yeah, why I've been, I'm very fortunate to get, to have, like, really good partners around the table, including EV3, which I think is the smartest guys on DePIN. Like, God, you guys were investing before DePIN was a term.
That's way too kind of you. And candidly, like, all of our thesis stuff is, like, because we work with insane founders like Jason, who introduced us in the first place and was like, you got to get involved in this.
Yeah.
But no, Santi, look, I think at the end of the day, one of the things you do so well is, like, you're so articulate and just, like, taking the problems that exist and sort of bringing them to bear and presenting them in, like, the most meaningful way in terms of how they can be the highest impact. And candidly, I don't think the fund managers have figured out how to do that, because I think it comes down to conviction. And, like, you don't really have the conviction unless you're in the trenches kind of doing it. And, when we thought about starting EV3 and, like, how we structured it, we were almost, like, halfway to what you guys were doing, which is, like, we're young dudes, we're going to get in the trenches, we're going to help people build these companies, but didn't have the product vision, I think, the way you do. But by the same token, I think, if you have an idea and you have a ton of conviction like these guys, I think you can go raise the capital for it. I think if you're sort of pushing for a diversified bucket of ideas, it's a harder one right now. And I think the managers are, like, really, look, in our fundraise, I just have to say it, like, Jason has been, like, an MVP. We've, like, introduced him to at least 3 different, like, investors that we've closed. And candidly, like, that's what it comes down to today is, like, you have to play a collaborative game. You have to get all sorts of people involved. And, amazing founders are kind of the lifeblood of the industry at the end of the day. So, Santi, I'll kick that right back to you to say that you had nice things to say about us, but we've learned everything we have from people like Jason and Neil and Andrina, and I mean, there's just so many of them.
Yeah, I don't know. I mean, I'd be curious to hear Jason's journey because, like, I coming as an investor, I didn't necessarily see myself as a builder, and then I listened to 200 hours of Founders podcasts, and you start realizing, look, a lot of the same things that you do as an investor, you have to have as a builder, and this really one thing that you need to get really right is inspire smarter people to come join you in the mission. And as I've spent most of my time is spent on hiring, like, I need to hire A+ players, way smarter than I am across telco, stablecoins, fintech, private equity. Even though I've done it before, there's people that are much better, like, fresh in that game. And so I think, like, you're really inspiring people to join, which is as an industry, crypto has, like, really captured the imagination of younger generations. So I think, like, we don't necessarily have that problem. But I do think that, timing is really essential. And so, it's honestly been the most inspiring thing to just, like, hear from people that said, God, I love telco, like the Helium community and folks within that community, or people in private equity. And I think on a variety of sides, I think you have really smart people that want to join this industry, and you just got to find a good home for them. And hopefully Inversion is that for them, but also, if you're an energy geek like Evan, who's Jason's co-founder, like, you just appreciate how crypto can fit in. The last thing I'll say is what really excited me about DePIN when I started investing in DePIN much later than you guys was I started noticing that the smartest founders coming into crypto were building on DePIN. Neil from Andrina, Jason, who invested in energy, understands that, and Evan is co-founder, like really sharp guys. Why is that important? Because I guess like when you come to this, when you've been obsessing about a particular problem, whether it's telco or energy and the grid and the fragility there, or wireless and ISP providers, and you come to the conclusion after many, many years of being in the industry that the solution to a very specific problem was crypto and crypto rails, it's just a very powerful message. And I think that's like a common denominator in DePIN that is like the strongest signal, I think, of why crypto is going to work.
100%. And yeah, Jason, let's hear from you on how Daylight's been going, specifically like the revenue generation side of things. Like I think people are aware of you all's brand and kind of the subsector of DePIN you're operating in, which is energy. But what kind of has been the business model so far in terms of revenue generation, and how is that going? And then if you can give us any info on mainnet and token, we'd love to hear it, because everyone in DePIN is eagerly awaiting that launch.
Yeah, no, it's been the last 3 months have been among the most exciting 3 months that I've been building Daylight for a number of reasons. We have, just in this beta phase, there's tens of thousands of people, their homes, their energy devices connected, engaging with the platform, contributing data to the platform. But I think the most exciting piece, and this is a big alpha leak, right? Because this announcement actually won't formally be going out until June. But the product that we've been most excited about, and I think we'll talk more about DePIN capital stacks in a little while, is something that we're calling energy subscriptions. But if you think about DePINs from a spectrum of, low P, high P, as the debate was on Twitter, 6 months ago, is it better to have a low physical, element to your DePIN or a high physical element? Energy is probably about as high as you can go. And the further you go along that cap or that spectrum towards more physical infrastructure, the more the cost explodes, right? And so DePIN launched with a $300, $500 IoT box from Helium. And now at Daylight, it's a $30,000 generation and storage system that goes onto your home. And that doesn't scale the same way that Helium scales. And you have to think about this thing from first principles. So we've been doing a ton of work behind the scenes on bringing what we're calling energy subscriptions to market, which effectively replaces your electric utility with something like Daylight, while also growing the asset base on the network, and then opening up new methods for participation in a DePIN network, not just purely from a token and mining perspective, but how can we do things like launch interesting yield products that accelerate DePIN network physical infrastructure, that tie in natively into the DeFi capital stack and offer uncorrelated yield streams to DeFi participants that are totally decoupled from the cyclicality of crypto markets. And then take what DePIN has done really well, which is coordinate, effectively behavior changes, and couple that with what DeFi has done really well, which is coordinate capital. I mean, if you look at Athena, you can think about Athena in many ways, but as a stable coin or whatever, you can also think about it as a private credit fund. And what private credit funds do you know in 18 months have gone to $5 billion of capital under management from zero? It's almost unheard of. And so, you look at hedge funds, private credit funds, super sophisticated investors that have spent 20 years on Wall Street raising $500, $600, $750 million fund ones. And so it is absolutely true. You get this question all the time, why crypto? But if your business model relies on coordinating behavior changes among groups of people, and also coordinating huge amounts of capital to catalyze some new activity or infrastructure in the world, then building it in on-chain capital markets on crypto rails is really the only way to do that today, in my opinion, to scale this fast you possibly want to scale it. And so that's why it's been so exciting for the last 3 months at Daylight, because we've gone from, what was an idea on how we scale infrastructure on our network 9 months ago to something that is really coming to the market very, very soon in an exciting way. So there's a lot more to come, a lot more announcements to be made. A lot more data will start to be made public. The network explorer is on the way. A lot of exciting updates are coming to the community. We've been hiring like crazy. To Santi's point, we're going through the exact same thing. We're just looking for A+ players. My job is finding those people, inspiring them every day. And one of the biggest founder lessons I've learned is if you walk into any room and somebody who's running a part of your business is not smarter than you, then you should fire them immediately and replace them with someone who is smarter than you. When I walk into an operations meeting, I want to be the dumbest person at the table. When I walk into a marketing meeting, I want to be the dumbest person at the table. When I walk into an engineering discussion, I want to be the dumbest person at the table. And with the amount of kind of personnel growth we've done at Daylight over the last, call it 2 to 3 months, every table I walk it to and sit down at, I feel like I'm no longer the smartest person, which is just a fantastic feeling because that's how you know you have A+ talent around the room. So it's been an exciting 3 months. The next 3 months, I think, will be even more exciting.
Yeah, what are you guys up to headcount wise roughly? Have you hired a bunch recently?
Yeah, we are at 21 now.
Nice.
Full
Like, I
time.
mean, more of the team. I know
Yeah.
like 2 of you guys, but that's awesome. And then just to double click on revenue, like I remember, I think you said before at conferences, like, you don't want to launch a token or mainnet until you're at a certain amount of revenue to where it's like very sustainable and also very meaningful, right? We don't want like another DePIN that's in the 6-7 figure kind of revenue accruing to the token range. So is there like a cutoff or a goal for you to get to revenue wise first? And then also, like, I'm assuming that the homeowner is kind of the customer, but what's your deal to them, right? Like, why are they paying you? What kind of services are you offering from day one?
Yeah, I think from day one, right? If you think about an energy subscription, and again, a lot more will come pretty soon. But the pitch to the homeowner is that you've been paying more for less. So since the 1980s, blackouts in the United States are up 10 times. So there's 10 times more blackouts today than there were in the 1980s. The rate of your electricity bills they've grown faster than the rate of inflation. So you're paying more for less from this old archaic infrastructure. And with an energy subscription, you're going to be paying a discount to what you're currently paying. So your power is going to be cheaper. And you're going to have backup power built in from day one. So regardless of what happens on the grid, you're protected. And you're also contributing to a broader network that's generating value together as a network platform. That's a super compelling pitch that, frankly, every person in the United States should be signing up for. But to your earlier question, Connor, yeah, I think, we obviously won't commit to anything around like when or if a token, will drop. But I think in general, you can just look at DePINs and you can look at the crypto markets in general, right? What are the best performing tokens outside of Bitcoin this year? It's Hyperliquid and it's Maker. It's the 2 projects funding the biggest, largest buybacks. I think if you want to launch a token in today's market, you need to have a differentiated fundamental opportunity for liquid funds and investors to underwrite. And what is that number? It's probably in 8 figures of revenue if you wanted to underwrite that with rapid growth, just like a traditional tech startup.
So do you think all the people that are launching tokens super early and just trying to get it out are making mistakes?
It's an interesting question, right? And this is like a question like kind of at the heart of DePIN today. I think it very much depends on your model and the infrastructure you're trying to incentivize. But what's interesting is you look at Helium, right? Helium is in a fascinating place right now. It is absolutely exploding in terms of coverage, in terms of usage, in terms of revenues. I've heard private estimations of all the different revenues that you're going to be tapping into. And Ariel from Hivemapper actually tweeted earlier today, if you take a look at the timeline, that if Helium was a private, quote unquote, private company without a token, it would be valued in the billion. I think that's probably right, given where they are in their PMF trajectory and what's actually going on. What's interesting is they've never really seemed to have hit this level of escape velocity and new coverage coming to market and user growth on the platform. And it's all being done, which is basically, scroll down, Connor, to like the chart of hotspots. Yeah, look at hotspots deployed, just total step function, as well as subscribers. And they're 85% of their tokens have been deployed at this point. And so what this actually proves to me is that the initial version of DePIN may have been incorrect, which is launch the token, then get to PMF, and then you have utility. They're showing the fastest growth in the history of Helium on both the supply and demand side when they're almost done with their token incentive platform. And it's because they finally gotten to the point where they've delivered something exceptionally amazing to the market on the product side. They have a beautiful, amazing subscription platform on the MVNO side. They have amazing tooling on the MNO side for offload. And that's just growing the network much further than the token could have. So I think there's this consideration now, if you're a DePIN project, do you lead with something that's an amazing product and an amazing demand side of your network that just gets people there for the product? And then you use your token to supercharge your growth and super scale your platform rather than using it at the beginning just to get started. There may be an actual, to Santi's what Santi always says, there may be an inversion of the DePIN model that we're seeing, which is actually build a product, then launch your token to embed loyalty, network effects, and super scale and hyper growth in a way that no traditional company can compete with you on. That may be the new model that we're seeing emerge.
Yeah, I mean, we've studied Helium a lot, right? Because we would say, okay, very encouraged. We're looking at it when they had like 21,000 hotspots. That was like last year. And you're like, okay, that's where carrier offloading started. And you're like, there's something here that is interesting. And of course, they didn't get it perfect. To Jason's point, like there's a lot of things that Helium perhaps now is cleaned up. You know, the dual token structure kind of never really works. Maybe they could have worked directly with ISPs as they're doing now with Dawn, to do brownfield deployments, right? If you're a large entity, you want to have all these hotspots, you kind of have to work directly with an ISP. Otherwise, you know, they can probably shut you down if they're not aware of what you're doing. But we've been very impressed and encouraged. Like, I think like the key with DePIN networks, fundamentally, I think of DePIN as like what software as a service did for software, DePIN is doing for infrastructure. What do I mean by that? 1999, dot-com bubble crashes. Why? Because if you're a company and you wanted to deploy software, you had to buy a license that was deployed on-prem, and that was a very big capital outlay. And so if you're a startup, you had to raise millions and millions of dollars to have your CRM and all these instances of software that you needed. So it was very CapEx intensive, meaning a lot of business models, including pets.com and somebody that went bankrupt, like, is because, you know, it has a very CapEx intensive thing. Software as a service shifts CapEx to OpEx, meaning very flexible spend. And a lot of these companies can pay per seat, not as a company, right? And so it becomes very viable. So DePIN, I think, does that for infrastructure. Like Helium, for instance, convinced 21,000 enthusiasts to buy a hotspot in the $300 or $400 on this idea that they're going to contribute to a network, provision wireless, and in exchange for that, get some rewards called HNT or the IoT token that has since been deprecated. It's, as with any network, it's still some capital investment, right? What DePIN's done is like sort of like, as opposed to one centralized company spending tens of millions of dollars for this hardware, you sort of distribute that to the community, or offload that to the community. I guess like an exercise is what could Helium have done differently to like supercharge their growth as opposed to now? Because it's interesting, right? HNT is like not an all-time high, but they're seeing all this traction. And to me, that's like they've just, to Jason's point, delivered a really good product and they have really good density. And perhaps more importantly, they've just innovated on the offloading reliability to convince someone like AT&T, because that's always been like the most challenging part. So they've done some really technical advancements here that have like made the Helium network really compelling for carriers to utilize. But I guess off the top of my head, as we think about going international, you know, deploying hotspots without even a token, if you believe you're going to get users and be able to provide a really reliable service, I think it's very compelling. And then you can launch the token after that. But I perhaps would have, like to Jason's point, kind of like found product market fit. For us, it's different because we're already buying something that exists and then just offloading and then converting a telco into a bank. Because you buy a 3.5, 5 times EBITDA business and you convert it into a 20 times one. Because if fintechs trade at 15 to 20, MVNOs trade at 3 to 5. You're turning a shitty asset on a standalone basis to a really nice asset with stablecoins. And then lowering costs with offloading. But it's like, yeah, it's just different how we go about it.
Yeah, it's hard to say that like what Helium should have done differently, right? Because there's so much path dependency to where they are and the embedded community. You can't argue they should do anything differently. And they've done an exceptional job finding product market fit and building something incredibly useful and powerful. I just think as you look at the history of their journey, a lot of people that seem to kind of enter the space, myself included, when I first started Daylight, like to analogize what we're doing to the first phase of Helium, when in fact, maybe there's a lot more to learn from this new phase of Helium. And you talk to DePIN's founders over and over again, it's the same story, we're Helium for X. But maybe, I'm not saying there is or there isn't, and just from my personal journey, I think there maybe is more to learn from the last 12 months of Helium than there was from the first 12 months of Helium. And so I encourage people to look into that. But you're right, Santi, why is it not at all-time highs? It should be for a fundamental standpoint. And frankly, it may be one of the most kind of asymmetric risk-return bets in crypto today is just, the trajectory that platform is on compared to its market cap, right? There's also a difference between like on-chain revenue that Helium's generating on the wholesale gigabit sales and also like additional revenue. And who knows how the equity company of Nova and the protocol itself continue to merge over time. Does it end up at a state like Hyperliquid, or does it continue to stay split? Who really knows? But I feel pretty comfortable that that the platform is going to continue to grow in usage and usability. By the way, you brought up Andrina and Dawn, and I think they're another great example of using a token to supercharge growth rather than bootstrap. Neil has done an exceptional job of building a real business, generating real revenues in a traditional fashion. And now he's going to absolutely supercharge growth and loyalty and stickiness with Dawn in the next phase of Andrina. So I think a lot of great entrepreneurs are starting to recognize this pattern.
Yeah, no, it's. I think you hit the nail on the head. It's a fascinating place because, I mean, confidentially, you could probably find this on Twitter if you looked. The Helium guys, it looks like they might be doing more than $50 million of revenue if you look at like their mobile business plus their offload business and everything. That's fucking substantial. But
I'm sure you could back into it just on the prepaids alone that they've added, right?
Well, so Amir tweeted something. If you go and look through his replies, you might find something. Right. No, just look. I think it's super interesting because I actually think the biggest thing that's holding Helium back is the biggest thing that's holding DePIN back as a whole, which is just like the perception of complexity, which is that like you have this big asset, it does revenue, you're not sure where that revenue is going. Does it accrue to token holders? Does it accrue to equity holders? I think you have a bunch of VCs from like the last cycle that invested in this thing that don't know the answer to that question. So they just like every time they have an unlock, they press the sell button. And you just have like this cascading downturn of these VCs that don't understand the asset that are trying to sell it. And
that's a good question, Mahesh. How should going forward DePINs think about the tension between equity labs and token?
No, look, you hit the nail on the head to begin with, which is that Helium probably didn't have a choice because today you could bootstrap a network like this with stablecoins if you have the demand already. You can bootstrap it with like a partial equity incentive as well. But like Helium kind of didn't have a choice because everyone was doing proof of work back then. Like this was before ETH even moved to proof of stake. And there was kind of one way to build these businesses. And I think you take what you can get in those kinds of situations and you build it. I think if you were starting again from scratch now, I think you'd build it in a way whereby if you have these big demand pools, use stable coins to fill a fair amount of your proposition and then maybe tokens to fill the rest. And so what do I think Helium is going to do now? They're going to have to figure out how to like combine the equity and the token, I think, in some kind of way, because the clean way to think about this is, there's a network and an operating business, and the operating business becomes the first client of the network. So then the network kind of takes like a piece of revenue into perpetuity for providing a service. In Helium's case, 1 gigabyte of bandwidth, it gets paid 50 cents. And then the operating company buys that bandwidth for 50 cents and then sells it to another customer, in this case using a phone plan. That's kind of how people have thought about it in the past, have like been like there are two companies, but that's complex because like fiduciary rights you have these rights that are only to the equity holders where you have to legally maximize equity holder value, and it introduces these like weird questions of like how do you even think about it relative to the equity and the token. But like I think it's a broader DePIN thing where there's just a fair amount of confusion right now as to what these things will do or where they might end up being. And I mean, I'll point you to the simplest example. Like, I think a lot of people don't even know what DePIN stands for anymore. Like, I'm curious if you guys have a take on this.
True. What was the first DePIN network, by the way? It was Bitcoin.
That's a take.
A lot of people would argue against that, but
I think we could
this
argue.
Is what we're here for. Let's go.
In the sense of like, we had to make it a bit more controversial, right? Because we're all agreeing each other. Here's where I come at it, which is, or Filecoin, but like Bitcoin, people are no different. Filecoin, okay, but no different than Bitcoin. Like, what you have, I think, the problem with these proof of work networks is that there's always constant sell pressure by someone that needs to recoup the capex. You're buying ASICs, you're buying hotspots, you're buying equipment to mine something that you think is valuable, but you have as an economic actor, you have an incentive to recoup that capex and then make a profit. And so that constant sell pressure is just inherent in proof of work networks. Like Bitcoin actually very impressively was able to like reach some sort of escape velocity, meaning Bitcoin became like digital gold narrative and is the perfect meme. And so you kind of broke away from that, but miners are constantly selling into the market. The way I think about how to make, so the question is, I think if you're a DePIN project, it's always, how are you going to find supply sinks? There's always supply that comes live, depending on what your schedule is. You're going to have to find people or ways that gets absorbed into the market, because price does matter. It computes into these decisions of all the different actors and constituents. Mahesh, you mentioned like the way I think about inversion is we actually make a DePIN network like Helium far more resilient because we're another client, because we have an MVNO, right? And we're absorbing that. And why is that the case? Because when I do the math of like buying an MVNO and cutting cost by offloading, again, the math that you articulated is Helium because the network guarantees you 50 cents per gig. That is vastly more economical than buying from a MNO like AT&T that is going to charge you $1 or $2 or maybe more. And so that's like very compelling if you're an MVNO. I don't care what the price of H&T is. So the way we thought about it is we're going to buy all these hotspots, deploy them in a place like Mexico, do a massive brownfield deployment. It's a $10 million capex investment, so to speak, right? The business, if you buy an MVNO of scale, is spending maybe $200 to $300 million of data because it's buying at $1 or $2. The larger the MVNO is what I'm trying to say, the more costs that you can reduce. And so you have to factor that in. It's what is the capex investment? I'm going to make a $10 million capex investment, but I'm going to save $100 million year one because I'm able to offload. All I care about is the network reliability and the price per gig. And so I don't even, yes, I'm mining the H&T because I own these hotspots, but I don't care if H&T is at $1, at $5, or $10. In fact, I don't need to sell H&T because I'm recouping the capex because I operate a business that uses the network. And I think like having I'm obviously tooting my own horn, but having inversion as an operator of hotspots, but also more importantly as a MVNO using the network, I think makes the Helium network, like you just absorb a lot of the supply without having to sell it. And I think that strengthens the composition of a DePIN network like Helium. Jason, I don't know if you've thought about like supply sinks.
There's like two pieces to that, Santi, right? Where like you are filling in your own brownfield infrastructure. And then there's the question of, okay, if you're the client that's using that infrastructure, like why do you need Helium at all? Because you could just deploy it and you can just use the infrastructure you deployed yourselves. I think the question, I think the answer, right, is on Helium, the ROIC of that equipment is not just your own internalized or your own internalized OpEx reduction, right? Other people can also roam onto your infrastructure and use the infrastructure you've deployed. And you've just given them one front end to do that through Helium. So I think that's what's really interesting about the strategy is like you of course get the OpEx increase and the EBITDA increase, or OpEx decrease, EBITDA increase, but you also on an infrastructure CapEx deployment increase the ROIC by some marginal amount because you're getting H&T emissions and you're also getting additional roaming from other carriers. So I think it's like kind of a new business model in an interesting way.
But I don't have to, I'm not as compelled to sell H&T because
that's right.
I have less trigger happiness. But I'm curious, like if this makes sense, but also for daylight. I mean, how have you guys thought about like supply sinks?
Yeah, and our token economy is not published yet, so there's still a lot of faking that's going on internally. But I would suggest, like, is there an interesting ways that DePIN tokens, if you could think about the majority of the mining on DePIN is coming from one of two groups, either like professional groups or retail. And in your case, Santi, you're the professional miner. You have stickier hands. You're underwriting an investment thesis. Retail, on the other hand, maybe mining and they have, bills to pay. They have costs to cover, whether it's related to the DePIN or not. They're getting this free money dropped to them every week. Of course, we're going to sell some of it and turn it to stable coins or dollars and use it for useful things. But is there a world where like you can design the economy embedded and enshrined in itself, where the retail user can actually use that token for something productive, right? Where in the case of Helium, you can use it not just to actually pay your mobile phone plan. And so like, I don't actually need to sell it. I can just use it somehow to pay my mobile phone plan. So maybe instead of tokens just being rerouted into like a programmatic buyback, maybe if you're a token holder and you're a subscriber to Helium and you have a subscriber NFT, you can burn a certain number of your HNT for a certain amount of dollars out of the treasury that go immediately to whoever your phone plan provider is. And now I have the incentive to actually just burn my tokens rather than sell them. And that kind of shuts off the largest supply faucet on the network. I think there's like interesting tweaks to economies we can make, where you don't just have capital flowing in to buy the tokens programmatically for buybacks and people selling tokens automatically for mining them. Maybe there's a way these things come together a little bit cleaner and help improve the economy as a whole. But I think that's still an open question and a lot of room for experimentation. Like imagine if you could burn your tokens to pay your energy bills. You could burn your tokens to pay your mobile phone bills. You could burn your tokens to do any number of interesting, in Andrea's case, you could burn your tokens to pay for your internet at home. All of a sudden, if I'm providing service to the network, I'm mining these tokens. Now my like cost of utility infrastructure is basically zero. In fact, it made it positive. So I think there's just interesting models there to explore.
Yeah, I think when you're providing a service, especially like that consumers could use, so whether it's energy bill per month or whether it's your cell phone bill per month, having those people, if they're kind of in the ecosystem already, pay for that service in the token and have that be a token sync, I think makes a lot of sense. Like the whole pay for your $20 a month, or maybe free, but the upgraded one's $20 a month. Pay for your phone plan with HNT. I like that idea. I think that's already live. The other thing I was thinking about is like AT&T.
Yeah, but I think Connor,
today.
I think my point is right now that's reliant on Helium accepting that as payment or Nova Labs. And I assume they're holding it on their balance sheet, but they may also be selling it, right? You don't really have insight to that. But if there was this treasury model, right, where people that are on Helium Mobile pay stable coins into a treasury, and that treasury holds those stable coins, and people that hold HNT can burn HNT for some exchange rate of stable coins in that treasury, and it can only be used for phone plan payments, let's say. So like you have to have a subscriber NFT, you can only use it to pay your subscription. You now have this like, you've kind of created this interesting closed economy that actually removes tokens from circulation by miners rather than miners just selling them to someone else who's willing to hold them and hopefully not sell them. Just because right now it's effectively an OTC sale to Nova Labs and then it's a black box. I assume they're holding them, but you don't really know, right? So
true. Yeah, the other thing they could do is like AT&T and the MNOs will basically buy an iPhone for you, right? And then almost like lease it out to you, or lease to own $20 a month. And after 4 years, you own the iPhone outright. MVNOs and maybe Helium Mobile specifically, I think could do that too, as like another way to add another $20, $30, $40 a month of what could be programmatic token buyback and burn to the revenue side of the equation for the token. I don't know if they thought of that, but yeah, that's interesting. I think in terms of providing services to consumers though, like I think we should talk about DePIN and how big we want the tent to be, because about a year ago I tweeted like we should leave the DePIN tent as wide as possible. It's generated a ton of attention. Let's make the acronym known. And the good news is I think we've achieved all that, right? Like everyone in crypto knows what DePIN is. Good founders get funded. I think it's probably time to narrow the scope a bit. And Santi, I feel like if we include Bitcoin and DePIN, it means everything is, right? I think I've heard someone say like, machines that are distributed around the world that are networked together that are providing a service that is not blockchain consensus is one definition for DePIN. I'm curious what you guys think about that, and also if we should only have something be called DePIN if it's providing like a service or a product in that localized geographical area, or do we want to include data storage and compute DePINs where it doesn't matter where the node is, but it's still contributing? What do you guys think?
Maybe I'll start there because honestly, a bit of a mea culpa. I think, EV3 does this thing every year where we publish a stated DePIN with Masari. And this year we included virtuals in that. It was like a conversational oversight, but partially on both ends. And I think that created a bunch of confusion. So like, I actually think we need to bring it back to sort of focus on like, what is DePIN? Like vertically, it is just like the incentivization of physical devices that largely have a hardware element, could be a robotics element or a machine element, to build out some sort of resource network or service that doesn't exist today. And, you know, people try to stretch DePIN into like all sorts of categories. I think at the end of the day, what I've realized is like there's so many interesting things going on that you don't need to. Like there's so many cool things that are going to emerge and that'll create their own communities. And the DePIN community is kind of massive already. So like I really think about it in terms of physical infrastructure being incentivized. Doesn't necessarily have to be in a crypto native way, but you know, in that sense, DePIN is an asset class, and there's tons of businesses in tons of different ways that can be structured to be a DePIN. I don't know if I agree with Santi on Bitcoin, but it's a hot take for sure. But maybe I'll leave it there.
Jason, what about you? We haven't heard your thoughts yet here, but I know you've had some very spicy takes about the DePIN sector, the acronym. Should we rename it? Should we narrow the definition? What do you think about all of this?
I think first off, in an industry of terrible names for things, DePIN is among the worst, if not the worst. It's just a really.
It used to be worse. TIPIN was worse. But yeah.
Shout out Mike.
Thanks, Mike.
TIPIN, the original. Yeah, DePIN's rough, man. It's a rough term, but I also think that it's everything that is not DeFi or like an NFT platform is now lumped into this DePIN category. It could be consumer. It could not even have a network tied to it, right? Like Kaido a DePIN, like it's just everything is just labeled DePIN for whatever reason. And I think it's because we're now actually, it's actually probably a good thing for crypto because we're getting to the point where lots of different projects, products, networks, infrastructure are getting built crypto natively. And we are just lumping them all into DePIN. I think it's time to just like remove the grouping and just look at projects for what they are, right? You would never comp PG&E, an electric utility, to AT&T. It's just an absurd comp, but like people are still saying, "Oh, I'm rotating from H&T to Honey, or I'm rotating from Honey to Nadix, or I'm rotating." It's like these are businesses that you can't really evaluate alongside each other. You have to evaluate them fundamentally by themselves, and that's why I have a problem with it, because it leads to comps that don't really make sense from a fundamental standpoint, and also leads to Kyle Samani tweets this all the time, right? Like reasoning by analogy leads to, I forget exactly what he says. Like reasoning by analogy is like actively leads to the wrong conclusions or something like that. And I think a lot of projects maybe could rebuild themselves in interesting ways if they thought about it more from first principles about their specific market and their specific domain, rather than we're building Helium for X, right?
Yeah, 100%. I mean, absolutely. At the end of the day, like you need to focus on, are you delivering a core value or service in a very differentiated way? And crypto is really good at coordination and mapping contributions and attaching some value to that in a very large scale. Whether it's Bitcoin, Filecoin, but each in their own right are servicing a very specific audience, customer type. And so, yeah, it's a sort of a catch-all phrase that just doesn't work. And look, I don't. There was a time where we made this like broad generalization of that's an internet business. Like, think about how stupid that was. Like, it's like every business is going to use the internet. Like, I think more so, like, crypto is it's type of like an operating standard that in some capacity allows you to. I think crypto as a whole is cost-cutting technology, because if you improve coordination at scale, you are able to just fundamentally remove friction from the equation, whether you're transferring stable coins or convincing people to do a particular set of action. At the end of the day, like every company like is capturing some sort of attention or wants to capture some sort of attention and create some sort of action from the user. And crypto is sort of, I think of it as just a very, very like behind the scenes operating system that will allow you in whatever industry, service, sector you're at to, in some part of that equation, cut costs in a very meaningful way, or do things that allow you to do things in a faster, better, cheaper way. But yeah, we shouldn't bucket.
By the way, who's doing that just as well as Helium is Blackbird, right? Behind the scenes, very compelling product for coordinating people to new types of activities to adjust their behavior in ways they would. Super interesting, super compelling. I think that's where we're going to see a lot of these projects go.
Yeah, I still need to check out Blackbird a bit more. They need to add some more restaurants in Miami. But guys, we're basically at time here, so I want to put a bookmark in it, save a lot of this stuff for next time. I think we only got through like half the questions maybe. So a lot of great takes here. I appreciate you guys coming on, and I'm definitely looking forward to doing this on a monthly basis and getting all these takes out into the wild in the future.